Hey everyone, my name is Riley and this video is a full guide on how to use the Fibonacci retracement in your trading. The Fibonacci retracement works the same on cryptocurrency, on stocks, on forex. So no matter what you are trading, the information in this video will be applicable and will be able to be used by you. It looks like a very confusing tool, but in reality is actually very simple to use. So let's jump right in and I will show you right now. Now, I think I'm going to be the first trader to admit this because usually these YouTube trading tutorials, they just show you the wins and how perfect their trading strategy is. If you've been trading for any amount of time, then you know that no trading strategy is perfect. Otherwise, everybody would be able to trade. So the Fibonacci retracement is simply just used as an indicator that shows you that price action can potentially bounce off some levels. It's definitely not perfect, and it definitely doesn't guarantee your win every time. This video is going to be unbiased. I'm going to show you how the Fibonacci retracement works, and some of the trades that I will show you are going to be winners, but I'm also going to show you how the Fibonacci retracement can give you some false positives and can result in some losing trades. So keep in mind when using the Fibonacci retracement, you do want to combine some of your other trading strategies and some other indicators with this. So I have my chart pulled up right here. Right now we are on GBP USD. And before we go in and I start explaining what the Fibonacci is and how we can use this, the first thing that we need to do is actually modify some of the Fibonacci settings to take into account which price levels are the most important. So just go over to this left-hand side and grab the Fibonacci retracement right here and just draw this on your chart. It doesn't have to match up, just randomly draw this on your chart because all we are going to do now is play with these settings to take into account the most important price levels. So when we are using the Fibonacci retracement, we are only really going to be looking at these three levels right here. Let me actually move this so you can see this better and it's not blocked off. We are looking for these three levels right here. So this 38 level, the 50 level, and the 61 level. The reason that we look for these is because in trading, these three levels are known as the Fibonacci golden zone. If we go for this level at the top, like if we are looking for a trend and then it starts to reverse, this level right here is a little bit too shallow. Like it might continue to drop down and we can't be fully confident at this level that price isn't going to continue to fall. This is a bit too shallow. And then with this one, if price reverses all the way down to here and falls through all of these Fibonacci levels, this could signal that the price is actually starting to have a full reversal and we are not just seeing a pullback in the market. So these three levels are the main levels that we are looking for. So what we are going to do is go into here and simplify the chart a lot more. Let me actually just delete these drawings and then draw the Fibonacci once again. Then we can go into settings right here. And what we are going to do is go to this top level is fine because it's already red. Go to this bottom level, this 78 level in here and turn this to red. Then we want to go for the 38 level right here, turn this to green. And then we also want to go for the 61 level and turn this to the lighter green. Then the final thing that we are going to do is go down and turn this background off to make this more visible and less clutter. And just like that, we now have our Fibonacci retracement and we can see the levels that we are actually going to look for. So now if we exit out of this and I cancel this down, here is how you can actually use the Fibonacci. So the way that we use Fibonacci is when we see a clear trend reversal. And the way that we do this is we look for price that goes from making lower lows to making a higher low right here. So we can clearly see that this is a downtrend because right here we are consistently making lower lows. And then we see a trend reversal right here because we go from making lower lows to making a higher low right here. So as soon as price gets to this level and we make this higher low, this is when we are going to start looking at drawing in the Fibonacci retracement. So if I go in and show you this in real time, because it's nice and simple to look at a chart that we can clearly see, but we want to look at this as if we are looking at this in real time. So let's go to here and right here we can see we are clearly still in a downtrend. But let's play price action out a little bit. We are still in a downtrend right now. However, right here, you can see that we are starting to have a little bit of a price reversal. Now, we can't be fully confident. This happens a few times in this level up here, but we can start looking at the chart more closely now and saying, hey, this might be a trend reversal right here. So let's continue to click play. Okay, so right here, we can now clearly see that we do in fact have a higher low. So what I'm now going to do, now we see this higher low, is we can go to the Fibonacci level, and we are going to draw this from the swing low that we find right here to the swing high that this has just made. So we grab the Fibonacci, we drag this from the bottom up to the top, and we click again. Now from here, we can go ahead and let price play out. So let's let this play out a little bit more. And right here, we make another swing high. So this is where I am now looking to potentially enter into a trade. So if we come back down to any of these golden levels right here, this is where I'm actually going to place my trade for the Fibonacci retracement. So let's go ahead and see if price is going to come down to one of these levels. Okay, so we hit this first level right here. If you're a little bit more of a risky trader, then you can definitely take this. But I don't like to take trades in this level. I think it's a little bit too risky. So let's continue and see if we actually fall through this level and we can take a trade with any of these. Okay, so it looks like that would have actually been a pretty nice trade right there. But what we are going to do, now we have made another swing high, is just follow this up. So we follow it up to here. We can see another swing high has been made, so let's follow it up even further. And as you can see, I'm actually showing you this in real time. Trading isn't always going to be smooth. We want to be constantly following price action up. We are just going to wait for it to come down to a price level where we are happy taking this trade. So you can see right here, we have two bounces. We could even take a trade around this level. But this is why I don't like taking trades. It's a little bit too risky. Hopefully we are coming down more towards that level right here. Let's continue to have a look. Okay, so we came down to that level. Are we seeing some price reversal right here? Maybe a little bit. We can see we kind of rejected off that line, but it did go a little bit too far. So let's now skip ahead and see if we can find anything here. Still, I'm not confident taking this trade. We now come down to this level. See if we have any price action bouncing off. Okay, we start to have a little bit of a harder reaction right there. So once I see we are definitely getting some reversal off this line, what I'm now going to do is I'm going to go ahead and take my trade. So let's say that we take the trade on this candle right here. What I'm going to do is I'm not going to place it just under this swing low, my stop loss. I'm actually going to place it underneath this line right here. So if this line breaks, then that's when I'm happy to move out of my trade. And then let's have a look if we have any support and resistance that we can use as a take profit. So zooming out, I'm not really seeing any resistance right here. So all I'm going to do is I'm just going to place my take profit right on this line where we were before. Because as you can see, we have two rejections right here. We have a rejection point here and a rejection point here. So this is where I'm going to place my take profit. Let's go to just below this line right here in case we don't go through. And we can see the risk to reward ratio right here is 0.9 to 1.21. So not the greatest risk to reward, but this is still a trade that I'm happy to take. So let's now go in and see if this trade is profitable or unprofitable. Perfect. So as you can see at this level, we would have just taken our profit. Definitely came through the take profit area, and this bounced off the resistance line that we set before. And that is basically how we can use the Fibonacci retracement to take some awesome trades. So that's awesome, and we just had a winning trade. And I feel like this is where most traders on YouTube would stop the video and say, hey, just use this trading strategy because it's perfect every time. But if we continue with this price action, I'm going to show you now where we can potentially get some false positives and where the Fibonacci retracement isn't perfect. What the Fibonacci retracement is very good at is giving you support and resistance lines. But if you have used support and resistance lines, then you know that sometimes they can give you some false positives. The Fibonacci is no different. So in here, let's continue with this price action. We still have the Fibonacci set up perfectly, going from the swing low to the swing high. And let's continue with price action right here. So we go to this level and we break through pretty easily. So we're not even looking at a trade right now, but we are potentially looking at a trade right here if we can come down to the golden level. So let's continue with price and see where this goes. Okay, so we're coming down to pretty close to this golden level. Some people would even take trades right here, but I prefer to go right down to the line. just like this. So you can see we bounce off that line. We have some pretty good candles coming in right here. But let's go a few candles ahead and see if this is actually a valid trade. So we are definitely seeing this as a resistance line. We can see that it bounced right off this golden level. So once again, I'm going to take a trade here. Let's go in for a long position of this candle. Once again, placing this just under this line and also the swing low. And then the take profit, we basically have two options here. We can either go for a more risky trade and once again go right up to this level, or alternatively, we can start seeing some resistance creep in around here at this line. So maybe we want to just push this above this line right here, or maybe on the line, and say this is where we want to take profit. So this is our trade right here. Let's skip ahead and see if we win this trade. As you can see, we just got stopped out. So this is where the Fibonacci retracement can give us some false positives. Now, you might argue that if I had just lowered my stop loss underneath this level slightly, then we would still be in profit. But realistically, nobody's going to move their stop loss this far under a level. We did break through the level, so that would be a loss of a trade. But we are starting to see that once again, price is reacting to this level and it's starting to move to the upside. So some traders would even go back in right here, and maybe they would even place a trade here and to go underneath this swing low, once again targeting this area. But if we look like the risk to reward ratio is basically the same, I personally wouldn't take this trade. But let's see how this pans out. Okay, so that would have been a profitable trade right there. Once again, we break right through this line. We react once again, but we break through. So this is just to show you that when it comes to the Fibonacci retracement, what you see from a lot of these YouTubers and content creators is they just show you the perfect example. However, when actually trading, it's going to be a lot harder to read the data, to know when to go in, to know when to come out. So this video is basically to say that this is how the Fibonacci works. This is how you draw the Fibonacci retracement, and this is how you can use it off of all of these other levels. However, keep in mind that this is not a perfect trading strategy. You want to use the Fibonacci level not as a magic tool, but basically as areas of support and resistance in conjunction with other trading tools or strategies that you are going to use. It's a supplement and it's not a fix. So hopefully this video helped you in some way, knowing how to use and how to draw the Fibonacci retracement, but also not tricking you into these multiple YouTube videos that I see that claim that every strategy is the perfect trading strategy. They don't show you how hard this actually is to implement. So that is how you can use the Fibonacci retracement. If you found this video valuable, don't forget to smash that like button and tap that subscribe button. And until next time, take it easy.